the beginning of a new week, oil prices were trading a bit lower on the back of the latest urgent meeting of the Iranian nuclear deal participants. Iran, China, Russia, the United Kingdom, Germany and France took part in the meeting. Meanwhile, the United States, that had been a member of the agreement until May last year, did not visit the meeting. The latest case of negligence by Iran of its obligation stipulated by the deal and extension of the uranium enrichment program were on the agenda. Tehran threatened to shrink the duties under the deal unless other participants protect Iran from the US sanctions. The official representatives of Iran stated that the meeting was productive. These comments signaled a possibility of easing of the tensions in the Strait of Hormuz that have been providing support to oil prices for the past several weeks. At the market opening, the Brent crude benchmark was trading in the red zone, unable to break out of the previous range. In early deals, Brent futures fell by 0.5% to $63.14 per barrel. Overall, oil prices may resume the middle-term upward trend unless no negative news comes out. The quotes are expected to return to $65 per barrel. At the same time, the volatility is likely to be low until Wednesday, when the Federal Reserve will hold a monetary policy meeting and the oil inventories report will see the light. On Friday, Becky Hughes published the oil recount report that showed that the number of active drilling facilities in the United States decreased by 3 units to 776. It is a clear signal of a possibility contraction of output in the nearest future, which can underpin the oil price growth. Another positive factor for the commodity is the GDP data from the United States that was released on Friday. It provided promising signals of a possible increase in demand for energy. The preliminary estimates of the US GDP growth rate for the second quarter exceeded expectations, thus boosting a rally in the American currency. As a result, the US dollar continued strengthening against other majors amid expectations of the Fed monetary policy easing. Let us remind that the Federal Reserve will announce its interest rate decision on July 31st. Meanwhile, the Bank of Russia has already decided to reduce the interest rate by 25 basis points on Friday. The accompanying statement of the bank came in line with the expectations, so another rate cut may happen in September. In early hours of the Moscow exchange trades, the dollar-ruble pair advanced to 63.53. We keep close tabs on the market developments. Stay tuned with us. See you.